Welcome to another stock market update and analysis. Today is March 29, 2020. In this video, we're going to analyze the S&P 500 along with the other major market indexes and also take a look at the market internals and also the stock market sentiment to see where the market might be headed in the near term. In addition to that, we'll also analyze the gold, oil, and the US dollar to see how these market is influencing the stock market and where they might be headed in the near term. Looking at these indexes here, you can see that after the Monday sell-off, it all have kind of rallied back up in the middle of the week until Friday. You see Friday is kind of pulled back a little bit because a lot of people essentially taking a precaution. They don't want to carry too much of a position over the weekend because you never know what could happen over the weekend. And so a lot of people basically taking a risk off and line up the position on Friday. So we'll see is next week gonna get a reversal, continue its bounce up from the middle of the week, or it will come back and retest the recent low. The other thing that I'm still continue monitoring is the Nasdaq 100 and the Nasdaq Composite for those two indexes to come back down and test the December 2018 low, because you can see all the other market indexes have taken out the December low here, the December 2018 low, except the Nasdaq 100 and the Nasdaq Composite. Looking at the sentiment chart here, you can see that the VIX actually came down a bit, and then at the near the end of the week, it started coming back up. So right now, it's still at a fairly elevated level of 65.55. And also the put call ratio, you can see the put call ratio during the middle of the week, it actually came back down. And right now it seems to be going back up, and we'll have to monitor that to see will it go back up to 1 or above 1 in the coming week. Here looking at the S&P 500 and the advanced decline, you can see that the advanced decline also came up as the market rallied back up on the bounce, the nice bounce after Monday sell-off. Look at the new high, new low. You can see on the New York Stock Exchange last Friday, it only finished up with 37 more new low than the new high. And also the other thing that I have alluded to on previous video is to kind of pay attention to the new high, new low the next time when the index made a new low. And you can see that the new high, new low are actually much above the extreme low down here when the market was here making this low. So that is a positive, very positive divergence here, and also with the new 52-week low and the 52-week high is getting close to the neutral line of 0. So kind of pay attention to this, and even though it start coming back down a bit, and next time, you know, the S&P 500 coming toward the low here to test this low, it's important to watch the new high, new low. Here we look at the Nasdaq 100 advanced decline also came up as the market rallied back up. And also in addition, the new high, new low is also behaving similarly to the S&P 500 and the New York Stock Exchange. You can see on Friday, you only have 32 more new low than new high. And again, if we take a look at this low here, you can see that this new high, new low is way above this low here when it made a low back here. Okay, so that's, let me do this over again. When it, let's see, where is this? Right, so when it made a low right here. So right now we see here on this lower low, we actually have a higher low on the new high, new low. So that is also a positive. On the cash index for the S&P 500, looking at the weekly chart here, you can see right, we're still monitoring this Fibonacci retracement from the March 2009 low to the 2020 high here, the all-time high. You can see we got a nice bounce off with this support level here last week. near the 2193.81, and we'll see would it be able to get back up to this pivot low here somewhere around 27.22, and then maybe we get another reversal down and try to take out the 50% retracement near the 2030. Here, looking on the daily chart of the S&P 500, you can see on Monday we got a little bit of a flush because of the maybe the market was kind of worried that the relief package that the Congress was working on is going to be delayed and causing more harm to the U.S. economy than necessary. So, but on Tuesday seems to be getting a little bit more positive tone. So we got a nice 3-day rally before it kind of pulled back. On Friday, I guess a lot of people basically do not want to carry the position over the weekend because of the uncertainty at this particular time. But if the market come back up, we're looking at the possibility of this resistance zone here between the 27.22 and 26.82. So that would be about a 40-point zone here for this. And we might see this come up and essentially also test the 50% retracement. Basically, I'm looking at the this swing here for a possible retracement on this Fibonacci retracement zone. So we'll see would it be able to continue to rally back up and maybe find some resistance here, then we'll come back down and we test this potential support area here at 24.43.96. Here, looking at the U.S. dollar, remember we were saying that the U.S. dollar came up to this high here, make this new high. And essentially, if the liquidity operation that the Fed got into is to basically try to bring the dollar down and provide the market with some liquidity to relieve some of the credit problem or potential problem in the credit market. And we see that the U.S. dollar came down pretty hard last week. Right now, we want to see what be able to come back down to this trend line here somewhere around 97. Ultimately, I'm looking for this thing to pull back to 95. Then we will probably also see with the lower U.S. dollar, the weaker U.S. dollar, we probably also see a little bit of a help on the oil market and help bring the oil prices up. Although there are still a huge supply problem, and there are rumor that that the Russian and the Saudi might be receptive in getting together and talk about this supply and demand and try to stabilize the market a bit to stabilize the price. So I wouldn't be surprised that we will see a little bit of a chopping action up to this 26. And if there are some kind of agreement, then eventually we probably will see it come back up to this 30-35 area, for this potential area. Essentially, I also got a Fibonacci retracement on this swing here, and you can see that the retracement zone is somewhere around 37 to 76 on this 618. And here we're looking at gold. You can see gold was usually at a time like this, it acts like a safe haven, but it hasn't been that at all because there are a lot of demand to raise cash, and so gold has basically been sold to raise cash. And hopefully this little bit spike down last week might have helped and or have completed the necessity to sell gold to raise cash, and also with the Fed injecting liquidity into the market, massive liquidity into the market, and so that help relieve some of the pressure of selling gold to raise cash here. And you can see that we got a nice bounce last week, and although it came back from its high, it pulled back from its high on Friday, but we're looking at this possibility of getting back up to this 1704. If it could back up there, then we still be looking at gold to come up to this 1850 area in the medium term here. I wouldn't say a long term or neither a short term. Looking at the FANG stock here, you can see that Facebook is still above the December 2018 low, and it is in the lower portion of this balance area. So I'm still expecting this thing to come down and test the December 2018 low. Apple still maintain above the upper edge. And again, I'm still looking for Apple to come back into the zone and test the 2018. On Amazon, Amazon is trying to get back above this to the top edge. And once again, I still waiting for Amazon to come back down and test the 2018 December low. And Netflix, likewise, it is trying to get a bounce back up to the upper edge. But once again, I'm still looking for this thing to come back down to take out the December low. Here it got pretty close, but it did not came below the December 2018 low. And Google, you can see Google is coming down to the low edge, but also got a nice bounce off of that edge. And once again, basically looking for this 2018 December low. And the reason why I'm looking for these FANG stock to come down and test the December 2018 low is my expectation is to see the Nasdaq 100 index to come down and test the 2018 low before this downward trend is completed. So I just leave you with this monthly chart here, looking back at the March 2009 all the way up to the February all-time high in 2020. You can see the dramatic drop in the last 2 months from February to year to date here in March. And you can see that right now is still trying to find some ground for some support. And hopefully that will get this market resolved soon. So if you like the content in this video, give it a thumbs up and help me smash the YouTube algorithm. And also click the subscribe and the notification icon so you'll be able to continue to watch these videos and be notified whenever I upload a new video to my YouTube channel. And thank you very much for watching, and keep safe, and be sure to keep social distancing to help keep yourself and others safe. Thank you very much.